Hey there, really quick before we dive into today's podcast, would you do us a favor and rate and share this podcast? That would help us out tremendously for blowing this thing up. We're not really big on asking for these types of things, but we really want to expand and be able to bring on more cool people like today's guest. If you can, take a minute. It only takes a minute. That would be great. All right, let's get to it. Welcome to the Producer Mindset, where we interview industry leaders about entrepreneurship, marketing, business development, and overall what it takes to run a successful business in, but not exclusive to, the real estate industry in today's age. Mike Hardwick is one of the most well-known businessmen and philanthropists in Nashville, Tennessee, and around the country. He founded Churchill Mortgage Corporation in 1992 in Brentwood, Tennessee. Now, Churchill is licensed in 47 states and originating over $4 billion per year. Before Churchill Mortgage, Mike's career was spent in commercial and investment banking in the early 80s. Mike founded a condo conversion company, which grew to be one of the largest in the nation. Shortly after the peak of that business, Mike became one of the principal founders of Franklin National Bank in Franklin, Tennessee. Mike served as the executive vice president until 1992 when he founded Churchill Mortgage. He continued serving on the board of directors of Franklin National Bank for several years thereafter until it was acquired by Fifth Third Bank. In 2016, Mike wrote Keep Chopping Wood, the story of a preacher's son who had it all, lost it all, and then regained true wealth. Everyone, please welcome Mike Hardwick.
All right. Good to see you.
You too. One of the first questions that we ask everybody that comes on is, one day you were born, now you're here with us on the Producer Mindset. Can you give us a quick 5 minutes, maybe 10-minute breakdown on what happened in between?
So you're asking me to consolidate almost in a week. I'll be 71, Josh.
I would say pre-Churchill, pre-1992.
Yeah. Mother and father were pastors. They got married at age 18 and 19. They started a church. And I came along 10 months after they got married. All that happened in a span of 12 months. And I heard Dad say often, thank God, Mike came along 10 months later, not 8, or I might not have had my 60-year career of growing that church from 12 folks the first Sunday to about a little over 9,000 members. They were there 60 years, had tremendous influence and impact on my life. Obviously, they were wonderful parents. And in those early years after high school, I got my first degree from a small college in St. Louis called Gateway College, where I graduated with a double major in music and theology. I thought I might follow my dad's footsteps. Also, Mom and Dad were tremendously musically gifted, and I took an interest in music as a result of that. But I graduated in 3 years, went straight through, came home, sat down with my dad one night, talked and said, Dad, I don't think I have this calling that I've heard you talk about all my life. What do I do? And his response in summary was, son, if you don't have the calling and you try to go into the ministry, it'll be work, it'll be labor all your life. If you do have the calling and you go into something else, eventually you'll probably come around and come back into the ministry. And I said, okay, great. So what do I do? And he said to me something I really didn't want to hear. He said, well, you probably ought to go back to college and get another degree. So I did that, went to Belmont University, a very well-known college here in town, about 10,000 students. 2 years later, because they accepted a lot of my credits from Gateway, I graduated with a BBA and an emphasis in finance, got into the commercial banking business. By the way, I'll promote my book. I wrote a book, came out with about 4 years ago. We've sold, 65 to 70,000 copies. It's done fairly well. I tell a lot of the color and the stories behind all of this. Some of my successes, a lot of my failures that I really learned from, and some funny stories in there along the way about the naked banker. I'll just tease that a little bit. Maybe some of your listeners will want to go to Amazon.com and look up Mike Hardwick, and the title of the book is Keep Chopping Wood. So I got into commercial banking right out of the University of Belmont. And my entire 40-plus year career, Josh, has now been in all three phases of banking. The commercial banking, I started as a commercial bank loan officer. I've been a founder of two banks, one in 1989, Franklin National Bank. We grew that over 13 years to about $1 billion. Then we sold it to Fifth Third Bank out of Cincinnati, Ohio, for the highest multiple any bank in America has ever sold for. So we were very blessed, is what I like to say. Some would say lucky, whatever suits your fancy. I feel like I was very blessed. Made monopoly money off that sale. I was the third largest shareholder in the bank. Then we started another bank about 4 years ago here in Nashville called Studio Bank, and we're doing quite well with that bank. So I was heavy into commercial banking. I also got into investment banking for a few years with J.C. Bradford Company. Bradford later sold out to Payne Weber, I believe, but at the time I was with them. They were the largest investment banking firm headquartered in the Southeast. So they were very large, very strong, regional Merrill Lynch type investment bank firm. And then over the last many years, I've been in mortgage banking. I started Churchill March 13th of 1992. I remember a chilly Friday morning went in, it was just me. I was lucky enough to come to know your dad, and we linked up and became business partners. We've been working together for 25 years. I started Churchill 30 years ago. And we've grown Churchill to our max was 1,100 plus employees over 40 some odd states. So that's it in a nutshell. I hope I kept it in 5 minutes.
Yeah. No, that's amazing. I feel like we can dive into a little bit more. So why mortgages? What kind of drove you to mortgage banking? Was it just something that was calling you, or how can you give us a little insight about that?
Sure. Number one, my finance degree. So I've always loved numbers, math, dealing with numbers. And thus, I've been in the banking world all my 43 or 44 years now, as we just mentioned. I digressed out of the banking world slightly in 1980. A very wealthy family here in town employed me to start a condominium conversion company for them. I won't take time now to get into all that involved, only to say we did grow it to, we became the third largest condo conversion company in America over the next 6 years. And one of the things that we did was, for all of our buyers, we provided financing. So we would underwrite loans and package those loans and then sell those loans, which is basically what mortgage bankers do. We make loans to home buyers or folks that want to refinance. We underwrite those loans basically to fit Fannie Mae and Freddie Mac guidelines. We pool those loans in packages. We create mortgage-backed securities, and we sell them on Wall Street. So I got my early taste of that while we were selling condominiums and thoroughly enjoyed it. And then one of probably my favorite president of all time, President Ronald Reagan. So admired him, still do. But he did partner up with Tip O'Neill, the Speaker of the House in that era, and they were able to get a piece of legislation passed in Congress called the Tax Reform Act of 1986. I could write a PhD thesis on that act. I'd love to do another podcast and just talk about what that meant for our country. But suffice it to say, that single piece of legislation wiped out much of the home mortgage lending industry in that era. Most of the time back in that day, 80 to 90% of the time when people needed a home loan to buy a new home, they went to their local savings and loan institute. You remember that old movie, maybe It's a Wonderful Life, old black and white Christmas movie. That kind of tells the story a little bit of savings and loans. The Tax Reform Act of 1986 was so dramatic in what it covered and what it did. And again, I won't try to go into all that right now. But that single act of legislation basically wiped out the S&L industry. You can go all across the country today. You'd be hard pressed to find an S&L. And it also wiped out my condominium conversion business. It changed all the depreciation laws of a real estate. And so all of a sudden, my company that I built, and we were doing great. Over 18 months, we slowly died a painful death. We finally shut it down. I went unemployed for 2 years. I went through what later was determined was probably a little clinical depression. It was a tough time. I lost everything I had. and I had to start all over again. And again, I talk about that in detail in my book to help others kind of realize you can do great. But as Jesse Jackson once said, sometimes we thrive, sometimes we survive. And it was during that era that I was hanging on by the hair of my chin trying to survive. My rich, wealthy family that owned the business, they all went bankrupt. My good friend Dave Ramsey went bankrupt. It was a most difficult time. But I came out of that. Ultimately, is when I came up with the idea, well, if we can't borrow money and sell condos, let's start a bank and become a lender. Thus, we started Franklin National Bank. And in that bank, once we got open, we decided to open a mortgage division. I'd already had the experience of selling homes and providing the home loan financing. So I took that over as one of the many hats I wore in our little startup bank. And later decided to get out of the day-to-day operation of the bank. I stayed on as a founder and third largest shareholder. And I stayed on as a director of the board. But that's when I started Churchill Mortgage in 1992. So I loved mortgage lending then. It's been a great career, a lot of fun. 71 years old today or next week. And I don't know if I'll ever retire. I love the business.
Happy early birthday.
Thank you. October 20. Same birthday as Mickey Mantle, one of the great baseball players of all time.
There you go.
That's really cool. So I have a question. Having started Churchill back in 92, right? What did you believe to be true then in order to have a successful mortgage company that you realize today isn't true?
I know that the vast majority of businesses, particularly in the mortgage business, the overwhelming majority, they use debt to finance their business, finance their growth. And having gone through a financial loss that brought me to my knees and having had to restart my career and build something anew again, one of the decisions I made at that time was I was not going to use debt to grow my business. Now, obviously in the mortgage business, we use warehouse lines of credit to fund the loans, and we typically pay that warehouse line off within 10 to 14 days when we sell that loan into the market, the secondary market. But we've never borrowed money to finance just the business operating side. If we need, all my guys around here, they know my line. If we need a new phone system and we don't have the cash to pay for it, what do? And they all know the answer. Josh and Matt Clark quite well. Matt, Lawson, Jim, they'd all say, we use bubble gum and duct tape and we make the phone system. We got work until we get enough cash to buy a new one. We're not going to borrow money. We're just not going to do it. The great paradox is we're in the lending business, but we don't borrow money. And that was a decision I made almost 31 years ago now. And it has really done me well. Right now, for example, the mortgage industry is real. Volumes are all 40 to 50% because interest rates have basically gone from about 3% to near 7%. And what that's done is it's wiped out most any of the refinance demand. The only demand we basically have now is demand from folks that want to borrow money to buy a home, not refinance an existing loan. And so the volumes nationwide across all companies is all 40 to 50%. So let me ask you gentlemen a question. If your gross revenue drops 40 to 50%, what will that do to your net revenue? And the answer, you don't have to answer for yourself, but the answer is there are very few companies that flow 40 and 50% of their gross revenue to the bottom line. Not many companies do that. Most companies will flow from a low of 4 or 5 or 6% to maybe upwards of 20, 25%. You guys are young enough, you may or may not remember back in the 07, 8, 9 era, the largest mortgage companies in the country at that time were companies like Countrywide, Washington Mutual, American Home Loans, Lehman Brothers, Aurora Loan Services, Colonial National Bank, and on. None of those mortgage companies are here today. Countrywide was the Quicken Loans, the Rocket Mortgage of its era. It was as big as Rocket is. They're gone. They're history. And right now, with volumes dropped so much, there are scores of mortgage companies that have already shut their doors this year. They just can't keep going. And one of the big primary reasons is they all took on debt to grow and expand. And over the last 4 or 5 years, when rates were so low, mortgage volumes were like meteoric. They were so massive and everybody was growing and growing and spending monopoly money to grow. We grew well, but we didn't grow as fast. Our growth was more measured. It was more manageable. And today we don't have any banks calling us saying, hey, I know your volumes are off, but you still owe those monthly payments on your loans. And so if I've learned anything, it's that the decision I made in 1992 from the pain of having too much personal debt in 1986, when President Reagan signed that new law into effect, that decision to grow my business using zero debt has stood us in really good decision.
That's really awesome. And one of the key things that you have been mentioning now, I think so far throughout everything that you've mentioned, Mike, is the ability to make decisions. And I know for a fact that being your own boss, building your business, one of the biggest issues is that you don't have anyone telling you what you need to do. Yeah. So you rely exactly and solely on the decisions that you make. How did you and your team consistently make decisions that continued even through that 07 through 09 era, continue to grow, whether it was passively or aggressively, Churchill Mortgage?
I think one thing is to realize and always remember, you are not the sharpest knife in the drawer. I am not the smartest guy in the mortgage business. And if I realize that and I own that, then what that should compel me to do is, number one, hire people smarter than you. I've got the vast majority of my senior leaders in this company, I have no problem admitting, particularly their specific line of work, they're smarter than me. And I was smart enough to hire them. So bring on people who are really smart, have a proven expertise in the area in which you're employing them, the job you're employing them to do. I'll give you a little book. If you haven't read this book, it's a simple, quick, easy read. It's a very good book. It's called The Ideal Team Player. As a matter of fact, I took it home with me last night. I reread that book periodically. It's written by a guy, his name is Patrick Lencioni, and The Ideal Team Player. And it has been, in a sense, it's been one of the hiring manuals that we have used at Churchill Mortgage. Lencioni says in his book, when you're looking to employ anybody, whether it's a janitor, a receptionist, or a CEO, you need to be looking broadly for 3 things in that person. Number one, are they smart? He does not mean by that, did they graduate from Vanderbilt or Stanford or Harvard with a 4.0? He means for the task or the job you're employing them to do, have they got a proven past record of being able to do that job somewhere else? If you're hiring a janitor, has that janitor worked in 1 or 2 or 3 other places? And when you call references, those former employers would say, he or she did an amazing job. We hated to lose them. We would hire them back in a heartbeat if we could get them. So number one, are they smart for the job you're employing them to do? Number 2, Lencioni says, are they hungry? Again, he doesn't mean by that if you don't give them the job, they won't be able to feed their family next month. What he means rather is, are they hungry to keep growing and improving and becoming better every day in the job you give them to do? One of the best examples we've got a gentleman that's been working here with us now 14 years. His name is Michael Brown. Michael is our top producer. He has been our top producer for the last 13 years. And every year, his production has grown over the previous year. Michael is hungry to grow and become better, improve his product knowledge, his sales skills. He's hungry to become better at what he's doing. The third thing Lencioni says is make sure that they are humble. Again, he doesn't mean by that, if your listeners could see me right now, you can see me, I'm looking down at the ground. It's like, he doesn't mean they don't feel worthy to be in your presence. Not that level kind of humility, but rather, do they have the humility that it takes? Hillary Clinton wrote a book one time. I'm not necessarily a big Hillary fan, but she did write a book that had a great title, and the title of the book was, It Takes a Village. Are they humble enough to realize, is Michael Brown humble enough to realize we need a really good receptionist, because every time somebody calls Michael, she's the first person to talk to him? Is he humble enough to realize that every time he takes a really great loan application, that loan application then goes to an army of processors, underwriters, shippers, funders, closers, that all work hard to make that loan close so that Michael can earn his commission on that loan? Is he humble enough to highly value everybody else on the team? And I can tell you, with Michael, everybody in this company loves Michael. Now, he's a hard charger. He pushes hard for his business, but he's humble. He appreciates everything everyone does to help him be the success he is. The last little interesting tip that I'll give you on that, I remember seeing a big poster on a wall in a company I visited one time. You've seen them, Successories, I believe is the name of the company. They produce these posters that, let's say, are probably, I don't know, 20, 25 inches wide and maybe 35, 40 inches tall. They're full color. They usually have a photo with a caption at the bottom. This particular photo was of a pastoral scene, cows way off in the distance. And in the forefront of the picture was a fence post. And sitting on top of that fence post was a turtle. And the caption at the bottom says simply, he, referring to the turtle, didn't get up there by himself. It took someone else to help him get up there. So when you're hiring somebody, when you're trying to grow a business, two thoughts. Number one, Patrick Lencioni's book is a great, short, easy read. Make sure you hire people who are smart, hungry, and humble. And the second piece, and I'll go through this quickly, my parents were pastors, and I've got a deep faith. Our company is a faith-based business. And there's a scripture that says, in the multitude of counsel, there is safety. I read a different translation one time that really helped it resonate more with me. This translation said, in the multitude of wise counsel, there's safety. So 2 points on that. Number one, in the multitude. Don't go to one great person, get their advice and run with it. Go to at least 3 or 4 or 5 people who have an expertise in what you're trying to do. A. B, have your best interests at heart. Get the wisdom of all 3 or 4 or 5 people. You'll probably make a better decision when you do that. So in the multitude, lastly, of wise counsel, make sure that the advice you're seeking from them, they have the background to give you good advice. I wouldn't have gone to my father to get advice on heart surgery. I would go to him for spiritual advice. So in the multitude of wise counsel, there's safety. Those would be my 2 comments that hopefully would help you a little bit.
Absolutely. It's awesome. Thank you.
That was amazing. Talking about counsel and wise counsel a little bit. I was talking to my dad a little bit, getting into business and making sure that you have the right people that are in your ear, that have your best interests in heart. And do you have a personal board of directors that help you guide your decisions? I know that I was talking with Jerry Leachman about having your personal board of directors and your team around you that helps you move in the right direction. So do you have them, and how often you talk to them? Give us a rundown.
Yeah, I do. And I know Jerry very well. Obviously, I know and love your dad immensely. He's one of my best friends in life. Both of those men will be on my personal board of directors. And I want to differentiate a little bit between a personal board of directors and a business board of directors. Obviously, we've got a great business board of directors for Churchill Mortgage. We meet regularly. We have monthly board meetings. And these guys and gals are tremendously valuable to me. I never could have grown Churchill to the place it is today without men and women like that. But also in your personal business board, life is fun, but life is difficult. Life throws us all curveballs. I had a great friend one time that wrote a book, and the title of his book was When Life Throws You a Curveball, Hit It. Okay, that's easier said than done at times, but it sure is a lot easier to hit that curveball. Ask Adam LaRoche if this is not true. When you've had a lot of practice, 10,000 hours of preparation, and a big part of that preparation for me in my married life, in my spiritual life, in my physical health life, in so many areas, my personal life, it's having men, mostly for me, men, that I go to. Your dad is one of those men, Josh. I respect your dad more than you would know. But your dad, Jerry Leachman, Cecil Kemp is one of those guys. Matt Clark, one of those guys. Matt's worked with me here now for 20 years. He's the COO of my business. I've got a couple more guys, and yeah, I go to them often with ideas and questions and seeking counsel and advice, wise counsel. I believe those men truly love me, care for me, and have my best interests at heart.
That's really awesome. And as a business leader, having been in business now, and you have a personal counsel, a business counsel, what are some of the attributes that a CEO, a founder should be looking for in the people that they bring on their leadership team?
I think I've addressed it a little bit in maybe some of my previous remarks. You want to be sure the people you bring on have a proven expertise in what you're hiring them to do. Now that I'll back up a little bit and say I've hired people who had no experience in this business, and I've struck out with a few of them, but I've hit a lot of home runs. I can think of several guys. We just celebrated 2 days ago David Porter. David's been with us 20 years now. Certainly one of our top 10 or 15 home loan specialists here in this company. When I hired David, he was a car salesman. He sold me 3 cars. He sold me a Jaguar, an Audi, and a Porsche many years ago. And we developed a good friendship and relationship because of him selling me those cars. And he approached me one day about, tell me more about the mortgage business, and is it something that you think I could succeed in? I saw a lot of things in David that I really liked. He had a great personality. He didn't have any trouble meeting strangers. I believed him. I grew to believe he was quite an honest man. He had a lot of integrity. He worked long hours. He was very committed to doing his job, doing it well. So I have hired people that didn't have a proven expertise precisely in the job I was employing them to do. But by far, you do want to look for those qualities in somebody. Are they, and some would not necessarily agree with all the qualities that I look for. I look for people of faith. That doesn't mean I don't hire somebody who doesn't have the faith I've got. And you could go through our hundreds, almost 1,100 employees, and we've got people that don't go to church and aren't professing Christians. We have a few people of the Muslim faith. But I do look for people who I come to believe have honesty, value honesty, really value honesty and integrity, value family, love this country, have a proven expertise, have a great work ethic. I look for those things in people, and it's done me years.
Very cool.
That's
Thank
awesome.
you.
I just have one last thing, and it has to go around something that we discussed a little bit earlier, talking about having that kind of guiding principle of growing your business without any debt. And I feel like nowadays, a lot of people think that in a technology-driven world of business, that it's the tech that's the secret sauce to building your sustainable business, to grow massively, hundreds of employees. But thinking about it, and just from our own personal exploration, may not be the technology. It has a lot to do with the culture that you build and having different guiding principles for your business and instilling those in the people that are working on the team. So can you speak to kind of when you started having those personal values or personal guiding principles, and maybe who introduced you to those?
It was my parents. My parents and all 4 of my grandparents. My grandparents, my grandfather Carson worked his entire career outdoors on the railroads, worked hard, never made much money at all, but was somebody that everybody that ever met him and came to know him even a little bit revered him, loved him. Why did they love Pop Carson? Number one, he had a faith, and that faith compelled him to act out of honesty and integrity. There's those two words again. It compelled him to act out of honesty and integrity. He worked hard and provided for 5 children. I don't know how he did it, quite honestly, but he did. My grandfather Hardwick was a carpenter and a home builder. Now, again, he didn't make a lot of money. You have to understand that my grandparents grew up in the Great Depression. My Pop Hardwick, for years, worked. They lived in Nashville, but he went to South Dakota because that's where he had to go to find work. He went to Florida because that's where he had to go to find work. He would send the money back to my grandmother, who was taking care of the children. So my grandparents were people of great faith. They understood the value of hard work and commitment, honesty, integrity, doing the right thing, no matter how hard it may be to do the right thing. And out of those 2 families came my mother and my father. Again, I've already talked about them, and I go into some depth in a chapter 2 of my book, but all my core values came right from my grandparents and my parents, and they are what motivate me and drive me every day. I've messed up. We've all had mistakes. We've all screwed up some things. I certainly have. But at the core, I've learned from my mistakes. I've grown from those mistakes. And hopefully, anybody that knows me, hopefully they would say, I'm proud to know Mike. He's influenced my life. I hope I've influenced a few lives like my parents have influenced mine.
I love it.
That's
well,
beautiful.
We're gonna include Keep Chopping Wood, the link to Keep Chopping Wood,
Right.
in the notes. One last question just about the book. The title is Gaining It All, Losing It All, and then Regaining True Wealth.
Yeah.
In the adversity that you faced, what's one anecdote that you can leave with the audience? A lot of them are entrepreneurs in their own right within the real estate industry.
Yeah.
So what's one anecdote you can leave us with?
Josh, one thing that I look back on and realize was the good Lord allowed me to have some huge success very early in my career. I went through that period with the condominium conversion company in particular, from 1980 to about 1986, 87. You got to remember that was almost 35 or so years ago. And it was during that 6 years or so that, and I'm not bragging about this, the good Lord allowed me to have this. I was making $500,000 a year then, with the time value of money, you fast forward that 35 years, that's
pretty penny.
a few million every year right now. So I was making great money, and it all went to my head. I look back now and I'm ashamed almost to say that I became very big-headed, thought I was smarter, thought I was better, thought I was bigger and badder than I was. I didn't handle it well. I had a level of arrogance that was not good. And from my personal belief system, I believe that the good Lord, in a sense, kind of looked at me and said, okay, Mike, I've given you all this success and you're not handling it the way I want you to, the way you need to. So I'm gonna take you back to give you a new PhD in how to start over and do it right the next time. And my caution would be, if you're having great success, again, the turtle did not get on top of that fence post by itself. There's always other people helping you achieve what you're achieving. And you'd be wise to realize that, appreciate that, have a heart of gratitude towards that, and don't think too highly of your success, because it can go like that. And you know a few people that will agree with me on that.
Yep. Absolutely. I love it.
That's
Thanks
awesome.
so much, Mike.
Thank you so much.
Go get Keep Chopping Wood. It's in the notes. And go follow Mike everywhere on social. We'll have it all in the description. Thanks
Josh,
so much,
I
Mike.
could throw out one more thing.
Yeah, go for it.
One more minute. I've written a second book, which is coming out on November the 9th.
Okay.
It's totally different from Keep Chopping Wood. It's entitled Called to Serve. And it's a very important book, I believe, for our times, dealing with police, firemen, EMS workers. And I hope that maybe your listeners maybe will, we're here in the next couple, 3 weeks when that book comes out. You might look on Amazon, hopefully, the publisher's Sky Horse. I think it's going to be a really good book, a very compelling book dealing with our times and some people that I call the real heroes in our country. Are there policemen, firefighters, EMS workers that are rogue? Yeah. Are there preachers that are rogue? Yeah. Are there presidents that are rogue? Are there mortgage bankers that are not good? Yes, but those are so few and far between. And I try to tell the stories of some real heroes in those communities. I hope your listeners may look at that book as well.
Absolutely.
It's been great being with you. Thank you so much.
Thank you so much.
Good talk to you.
You too.
Bye-bye.